As I defined, there's both momentum reasons for assuming that if we get above 25 by any credible amount, you're going to launch. That's based on momentum factors. And price even has a parallel channel there, such that if you can get up over 25, you can blow that channel out. I'd rather pause before going through that breakout hurdle and rest and relax, R&R, okay, before you go through, so that when you do go through those levels, you've got plenty of energy to run. So the best place to have a pause is right before such breakout levels. Now, this breakout level, not many people are noticing it. I've not seen many other technical reports identifying getting above 25 as a point of upside chaos. We think it is, and I love the behavior here. And gold churning just below a prior peak monthly close. I like that as well, because it indicates they're getting some R&R, so that when they do go through, they'll have the energy to really run. And I think the tone will change. I mean, there's been a dramatic move anyway, from just above 17 to almost 25 in silver, for example, or from $1,613 on gold to $1,900 and almost $50 in a matter of a few months. That's been pretty dramatic. But I think it'll be even more dramatic once we cross these hurdles, where suddenly those, especially large asset managers, who have not allocated sufficient assets out of this category, high risk, low reward, the stock market and other paper assets, and into the better performing assets, when they've not done that, they're in a bad position, because they either have to, shoot or get shot. Okay, they have to join. And so even though they may not like gold, in their guts and in their intellect, gold's performing. And so their competitors who happen to be more so in gold or gold miners or silver or related are beating them. So they have to make a decision. And there's a point at which I think is a psychological hurdle, and I think it's also a technical hurdle, where this gush effect could occur. And I think we're right below it right now, churning.
And I know last time we had you on, you said really the major story for 2023 is going to be, the Fed possibly pivoting and what the Fed is going to be doing here. We do have the meeting next week. What are your expectations for the Fed meeting next week?
Well, probably what everybody else is, and that's a quarter point rise, which just says, okay, they've been half, quarter now, so they're slowing, but that still that leaves open the possibility of more rate rises, because they're trying to, put the chest out and say, nah, we're tough, okay? They've had an ideal world. We pointed this out in a weekend report, that since June especially, many stock indices made lows in June. Now, some of them made lower lows in September, but marginally. But basically, since June of last year through the end of last year, most of the stock market decline sort of ceased, and we went into a churning pattern. S&P made some good gains, single-digit percent from that low. NASDAQ's trading, several percent only above its June low after, 6-7 months of rally effort. So you keep getting these rallies, but you do get stability. And so the stock market, I think, will precipitate psychological and market headline type events. And the fact that it's paused has been ideal for the Fed, because it's kept some of these events contained. Now, what do I mean by events? Well, we know that a lot of the major tech companies have laid off, 10% of their workforce. And it's a big chunk. And yet we don't have a recession, right? Okay. The unemployment numbers continue to look good. If you microanalyze them, you'll see that what looks good are the kind of jobs that aren't the best, and so forth. And so that, to some extent, we think is a very lagged indicator. But the Fed, that gives them more room to do what they want to do without having created an emergency. If you suddenly get another decline in the stock market over the next couple of months, where you take out the June and the September lows again, then all of this hopeful buying we've had for 6 to 7 months now, 7 months since the June low, of people buying, thinking, it's a bargain, oh boy, this is, that was correction, et cetera, taking the other side of the argument. We hear the word bottoming a lot on the financial TV shows. There may be a question mark behind it, but at least they're using the word bottoming, okay, which means they still have hope. Only a few of the old timers, asset managers, are saying, no, this is going to be a big disaster. Don't trust this. But a lot of the crowd out there still thinks, no, this is a very hopeful situation. If suddenly you break through the lows in the stock market and demonstrate that after 7 months of a hopeful buying by many investors, that it was a waste of time, that they fooled themselves, then you're going to have the CEOs out there who haven't laid off people, who are going to look over their shoulder and say, you know what, those guys, those other, Microsoft, Intel, et cetera, everybody's laid off major 10% or so of their workforce. And they haven't. They've been sitting on their chair looking at the data points, hopefully not going to get a recession, hopefully don't have to lay people off. But it's in their mind. You break that stock market to a new low, and I think that's going to be a psychological factor that will precipitate a lot of these guys coming off that balance point and joining in with the layoffs. So I think the stock market to that extent is sort of a creator of events. And I think that the Fed has had it ideal because they've raised rates and that stock market has sort of taken it well. If that stock market suddenly goes into another leg down, and we're particularly watching the banks, by the way, something unusual has happened there. We watched the relative performance of, for instance, KBE, which is the bank sector ETF. It's suddenly gotten sharply weak relative to the financial sector on a spread basis when we plot it week by week. It's suddenly weakened while financials have held. And compared to the S&P, the banks have sharply weakened. What's going on there? No, there's no headlines yet. But suddenly a very important sector that very few people are focused on has gotten relatively weak compared to the market without any real headline events yet. So we think that a rollover in the stock market could be a table turner. And our bet is that if that happens, while that's happening, you'll see silver and gold headed north.